Good evening, everybody, and welcome to our market review webinar. Guys, welcome back. We are back to it once again after our Easter holidays break. I trust you had a fantastic time and have had a profitable time in the markets. Guys, we have a lot to go through. We have some good content to cover from last week's fundamental activity, and we've also got a few big events to look forward to for the week ahead. So we will get started straight away and look at the fundamentals from last week. But before we get started, guys, can I just get a visual and a sound check, please? Can you all hear my voice loud and clear? Can you all see my screen? Okay, fantastic. Brilliant, guys. So, starting off from last week, last Monday was a little bit slow. The reason being, of course, we had multiple bank holidays throughout we had bank holidays throughout multiple economies, which created a real decreased volume of liquidity within the market. So the market was a little bit slow. We didn't really see any momentum. We just saw a lot of order accumulation over that Monday within the market. We didn't have any major fundamentals expected, and it was a very quiet day in terms of macroeconomics. Moving into Tuesday was more of the same. It was a pretty quiet day. We didn't have any high impact data expected, so there wasn't any real major volatility expected on Tuesday, and of course we didn't really see anything. Into Wednesday, we had a little bit more action within the markets. Finally, we were getting into some macroeconomic data, and we started to see some volatility entering the markets off of the back of these announcements. So initially, the CPI data quarter on quarter for the Australian economy came in very disappointing indeed. We were expecting a slight pull down, back down to around 0.2%. But we saw figures come out at 0% quarter on quarter. So, you know, real disappointing figures there for the Aussie Australian dollar, and as a result, we saw the sellers come into the Australian dollar quite powerfully, and we saw them push prices down throughout all of last week. So the Aussie dollar really did struggle off of the back of this data. A lot of selling pressure was coming into the market. Moving into the afternoon, we had data for the Canadian dollar, and we had the monetary policy report, the rate statement, and the overnight rates. And this was followed by a press conference. So to break it down, the overnight rate, the interest rate for the Central Bank of Canada, did not change. It wasn't expected to move from 1.75%. It was expected to remain at this level, partly due to recent economic data. It's been pretty consistently poor for the Canadian economy. Only really recently have we started to see a little bit of consistency coming back to the Canadian dollar. Really only over the past couple of weeks we've seen some positive data coming back for the Canadian dollar. So it had been a pretty mixed report in the lead up to this data release, and it's always interesting, guys, when we have this this change in circumstances, because it's always interesting to see if the bank will address it at this time, or if they'll wait until the next meeting before addressing any of the new circumstances that have arisen. So as a result of this data for the Canadian dollar, it was very bearish for the Canadian dollar. We saw the Canadian dollar struggle significantly against the US dollar. We saw it get gains back slightly over the pound and over the euro, but ultimately it was pretty bearish in the lead up to this event. So when the monetary policy report was released by the Bank of Canada, we did see a few dovish overtones to the report. Of course, they were citing previous concerns, but overall it was fairly hawkish. So although we've seen the Canadian dollar sell off of the back of this report initially, I think we might see the buyers come back in over the next week or two with the Canadian dollar. And the reason being is because fundamentally, on an intraday basis, we're starting to see economic data improve. And of course, guys, you know, apart from Friday's price action in crude oil, we've seen crude oil moving back up to that $65 per barrel. It was only, of course, really on Thursday and Friday that the sellers came back into the market there. But so higher oil prices have been aiding the Canadian economy, as well as this recent impressive fundamental data. So the dovish overtones, which were in the monetary policy report and in the rate statement and echoed in the press conference after, I don't think these are going to be too much cause for concern if we can see oil prices stay above that $60 per barrel, and if we see the Canadian data improve, continue to improve as it has done over the past couple of weeks. You know, if we can continue to see that for the next couple of weeks, I think we're going to have some really good opportunities to look to buy the Canadian dollar. Okay, so we need to be a little bit patient there, but there was some very interesting data that came out overall. Moving into Thursday morning, we had the monetary policy statement and the policy rate from the Bank of Japan. Of course, the outlook report as well. Now, the policy rate has been at minus 0.1% for some time. It's not expected to change. It is expected to remain at that level for the foreseeable future. So we don't really expect any major movements with the yen when it comes to monetary policy. So we don't expect to see any major movements with the Japanese yen over these Bank of Japan monetary policy rates and the monetary policy statement. The reason being is because they are, you know, they've outlined their monetary policy. It's been very consistent now for some time. They lowered interest rates gradually from, I think it's from about 0.5%. They gradually lowered them into those negative figures, into that negative territory, and it's been this way now for, I think, about 2 years. So it's not expected to change. It is expected to stay at those levels. So we don't really tend to see much come in the way of volatility for the Japanese yen. However, this time around, we did start to see the buyers come back into the yen off of the back of, really, it was throughout this week's price action. It wasn't so much off of the back of this announcement, but you know, we have seen the yen pretty strong throughout last week, and I would expect this strength to continue with the yen moving into the week ahead. So we didn't really see anything out of turn there for the Bank of Japan. Pretty much business as usual. For durable goods orders for the US dollar month on month were better than expected. Durable goods orders was much better than expected at 2.7%, up, you know, almost 4%, from minus 1.1, you know, to 2.7. So, you know, talking about about 3.5% increase there from that figure. So some good data coming in there for the US dollar, but remember, guys, as we've said over the past couple of weeks, we need to see that consistency with the US dollar. Although the dollar index has been very strong and the dollar has been rallying, we haven't really seen the economic data to support that rally with the US dollar. I think it's more seeing weakness over other currencies opposed to seeing strength within the US dollar. So I think until we start to see some consistency with the fundamentals, you know, over the space of a few weeks, maybe a month or two, when we start to see that consistent positive data coming into the market, then again, you know, we can look to change our view to, you know, a bullish macro view with the US dollar. So moving into Friday of last week, we had the Swiss National Bank chairman, Governor Jordan, addressing the markets. We didn't really see much change in the way from this announcement. Typically, you know, and historically, when the Swiss National Bank makes a major announcement to the market, they don't tend to wait for these events. What we tend to see is you know, the chairman speak, well, unscheduled to the markets. They will hold a press conference and they will make the announcements. They don't tend to do it at these times, but if we open the detail, we can see that the central bank governor was only due to speak at a general meeting of shareholders in Bern. So there wasn't anything there really to affect the Swiss franc. It was effectively the shareholders of the Swiss National Bank checking on how their investments are doing, and the health and the balance sheets of, you know, of the Swiss National Bank are both, you know, both very, very healthy. So overall, the Swiss National Bank, you know, doesn't have too many concerns. So, you know, we don't tend to see much volatility in terms of these announcements for the Swiss franc. When we see the volatility, it comes from unscheduled announcements. So, you know, for example, placing the 120 cap on the Euro Swiss and then removing that 120 cap on the Euro Swiss. Both of those announcements were unscheduled, so they don't tend to wait for these times. And to finish it off on Friday, we had advanced GDP figures quarter on quarter coming through at 3.2%. Some outstanding figures for the US economy there on the Friday. This did see the buyers come back into the US dollar, and you know, over the S&P 500, especially over the Dow Jones, both indexes performing very well, heading towards all-time highs. And I believe the S&P did break 3,000 barrier last week. Did we? No, working our way up to that 3,000 barrier. So touching the all-time highs at the moment, pretty much on the S&P 500. So starting to see some consistency coming back in with the US dollar, but not enough for me just yet. Really, this has only been 1 week of positive data. We need to see a good 2 or 3 weeks of consistent positive data, and then we can start to look to change our macro analysis, our macro outlook on the US dollar. So guys, that was last week's fundamental information. Guys, do you have any questions about any events last week? If you do, I'll give you a moment to write that in the group. If you don't, we will look to the week ahead and see what events we have taking place. We have 2 major events off of the top of my head to look out for this week. Of course, guys, it will be the first Friday of the month. So, of course, we have non-farm payroll data on the Friday, and I believe we have central bank data from the Federal Reserve for the US dollar as well. Okay, fantastic. So today, guys, the Spanish parliamentary elections are taking place. I think it's a little bit early to get to start getting pre-market prices for the euro. I think they start to come out around 8 o'clock, 8:30. The pre-market prices on the FX market. So I'll take a brief look quickly and see if we have price for the euro. Okay, not yet. So the pre-market prices aren't available just yet for the euro off of the back of these parliamentary elections. I wouldn't expect anything too major from the euro in terms of the Spanish elections. More so maybe with the German economy and the French economy, and to some degree the Dutch economy as well. These countries, when the elections take place, they will tend to move the euro, and we only have to think back to when Marine Le Pen was campaigning against Emmanuel Macron within France, and the prospect of Le Pen gaining office did start to bring some uncertainty to the euro. So you know, we can see parliamentary elections for the smaller economies, you know, impact the markets, but I really wouldn't expect too much there from the Spanish parliamentary election. Getting straight into tomorrow, we have Governor Carney addressing the markets. He's due to speak at the Innovate Finance Global Summit in London. I suspect he is just getting this summit underway. This will be opening remarks in the summit. Give it its Monday morning at 9:10 in the morning. So again, you know, I wouldn't expect it to impact the markets too heavily. I wouldn't expect really any volatility for the pound Monday morning from this event. I think it's more so going to be just opening remarks at that innovation summit. So Monday is a pretty steady day for us in terms of fundamentals. Moving into Tuesday, we have Manufacturing PMI data for the Chinese one. This can spill through into the Aussie and the New Zealand dollar, but at the same time, we have the ANZ business confidence data for the New Zealand dollar. This came through very disappointing, and if it will provide us with the data, it's been getting gradually worse and worse. So, yeah, not expecting anything there too positive with the New Zealand dollar off of the back of this data release. I think it could be more of the same in terms of business confidence. It's been moving, in one direction. The only thing that I do want to make note, guys, is again with the Australian economy. Especially within their construction industry. Now we are moving into their autumnal months, into their autumn months, and into their winter months. We are expected to see construction increase because, let's face it, guys, we're not going to want to be out there building away in 45-degree heat through the summer. We're going to want to wait till the winter, till it gets a bit cooler, into the autumn, into the winter, and maybe 25-30-degree heat is going to be much nicer to spend 10, 12, 14-hour days on site building away. So we will start to see a pickup in the Australian economy, especially from their construction sector over the next few months. But I think the New Zealand economy could remain a little bit staggered. Okay, so just a quick note I wanted to make there with the Australian dollar. Moving into Wednesday, we have into Tuesday, we have Canadian GDP month-on-month data expected. We don't have a forecast for this data release, which is unusual. Usually we do have a forecast. However, some pretty good figures coming out last month. If we can sustain that positivity, then guys, we are going to see some opportunities start to present themselves with the Canadian, with Canadian dollar looking to that long, looking to the buy side with the Canadian dollar. As mentioned, we're starting to see some positive data come out consistently. We just need that to continue to really give us that consistency. But otherwise, their economy is starting to strengthen up, and of course, that's been helped by high oil prices. And I think that is going to follow through within GDP month-on-month figures. So I would expect to see some positive figures there for the Canadian dollar. 3 p.m. UK time, we have CB consumer confidence for the US dollar. This has been a little bit up and down. The previous month's figures at 124 were very disappointing. Okay, it doesn't give us the data history, but the forecast was actually up towards 130. So, again, as mentioned with the US dollar, we're still waiting before, we see that consistency with that US dollar data. We're still waiting to see that consistency. 4 p.m. we have Governor Polos for the Bank of Canada addressing the markets. And he is due to testify along with the Senior Deputy Governor, Carolyn Wilkins, before the Standing Committee on Finance. Okay, so the government will press the central bank on certain matters, which will be on the record, just as the Treasury Select Committee does to the Bank of England here in the UK. It's just to ensure that the bank, just to ensure that the government is aware of what the bank is doing, and the bank, of course, is as transparent as possible with their dealings. So I wouldn't really expect anything major there with the Bank of Canada. Sometimes these can be interesting to watch. The reason being is because sometimes the central bank governors can get caught out in these meetings, and it is very interesting to see when they get caught out, because their cheeks go bright red, and they they begin to backpedal and stutter on what they say. So they can be quite fun and enjoyable to watch, especially when they ask the tricky questions. But other than that, I don't think there's going to be anything major there. I think the majority of the volatility for the Canadian dollar is going to come from the GDP month-on-month figures. Into the evening, we have employment change quarter-on-quarter and the unemployment rate data for the New Zealand dollar. So we are expecting a huge increase there at 0.5%. And if we get this increase at 0.5%, then unemployment rate is expected to fall from 4.3% to 4.2%. So if we see the employment change data quarter on quarter, if that doesn't make that 0.5 figure, then it's likely the unemployment rate will come through as 4.3. Okay, so both sets of data here real dependent on that employment change quarter on quarter. If they've been strong figures for the quarter and they come in at 0.5%, then the unemployment rate will fall to 4.2% from 4.3. But if they come in at maybe 0.2% or 0.3%, then I would expect this to come in at 4.3%. So essentially, if we see strong figures for employment change quarter on quarter, we will see we'll see positive figures there for the unemployment rate. So our eyes and our attention really on that employment change quarter on quarter. Moving in to Wednesday, guys, we have ISM manufacturing PMI data for the US dollar before we have the big one in the evening. So ISM manufacturing is expected to drop slightly to 55 from the previous forecast. As we can see with the forecasts really have been up and down since the start of the new year. We've had 57.7, 54.1, 55.6, 54.4, 55. So there's no real consistency here with the ISM manufacturing data. And there's not been much consistency there really through the results. We're sort of averaging around that 55 figure so far for this current year, and that's what we're expected to see again on Wednesday. So I wouldn't expect this to do much for the US dollar. The reason being is because I think the big one, the FOMC rate statement, is going to move the market considerably, dependent on what they say. So the federal funds rates, they aren't expected to change the interest rate from 2.5%, but they have been pressured by the government, by Donald Trump, by the government to decrease interest rate levels, as it's been, of course, counterproductive to their export industry. Of course, Donald Trump wants low interest rates to ensure that it keeps the value of the dollar fairly weak, with the weaker dollar, we see more attractive opportunities for outside buyers, of course, converting their money to the dollar. You want to convert your currency to a weak currency opposed to converting it to a strong currency. Of course, if I transfer my pound sterling into dollars, I have a weak currency, and I get more for my money. But if I were to transfer it into euros, for example, then I would of course get a bit less for my money. So ISM manufacturing data, I wouldn't expect to move the market too much. It's the federal funds rate, and although the federal funds rate isn't expected to move from 2.5%, I think then the next move that it could potentially see is a move to the downside. But for me, this is dependent on data. So, for example, if we do see that positive data earlier in the week, and we do see positive data for the ISM manufacturing, we see positive data for non-farm payroll on Friday, and the unemployment rate and average hourly earnings, and we have good, off of the back of that, good GDP data, and we see good retail sales data and good inflation data, then the next move for the Federal Reserve is to move interest rates up. But at present, the data is just not good enough, just not consistent enough to move to the upside. So it's going to be a very interesting Wednesday afternoon. Moving into Thursday, guys, we have more of the same. We have the Bank of England interest rate, or official bank rate, as it's now known as, the interest rate level, which is expected to stay at 0.75%. I would expect the central bank to take note of the pound's strength recently. So let me expand on that a little bit more. In terms of the macroeconomic data, which has been being released for the pound sterling, for the pound economy, for the UK economy, this data has been coming out consistently positive. The UK economy is in a quite a strong position at present, and we haven't seen much of this come through into the markets because, of course, we've got Brexit on the other hand. But given this positive data and the consistency behind this positive data, I wouldn't be surprised to see Governor Carney mention it on Thursday afternoon. Okay, so we could see Governor Carney start to look at the consistency that we're seeing in this positive data, for the pound sterling. So I think there could be some potential upside there for the pound on Thursday afternoon, but goodness knows how it's going to react next week, with Brexit continuing to be dragged out beyond the deadline that we had. Governor Carney is due to address the markets shortly after this, and this will be at the press conference again with the other MPC members about the inflation report and about the monetary policy summary. Inflation has been, the inflation target for the Bank of England is 2%. And although we just missed this 2% target, it has now been 1.9% for the past 2 months, and it's been around that 2% level on average for 2019. So the central bank doing a very good job there in terms of keeping inflation at the target level. So, I think it's going to be pretty positive there for the pound sterling. And then finally, guys, into Friday. So building permit approvals month on month are expected to fall considerably. Last month, the figures came out at 19.1, some outstandingly strong figures. The forecast was, if we look back to last week, the forecast was minus 1.7%, and we saw figures at 19.1%. Very strong figures indeed, and I believe this was due to a seasonal average. So where we are starting to get into that colder weather within Australia, we're approving more building permits. We're approving more building permits as we come into the colder months, because of course, as we mentioned, it's easier to work in colder weather opposed to working in warmer weather. So of course we're going to see more permits, more building permits approved, more building permits filed as we move into the cooler months. So naturally, as we see more building permits filed, we will see more building approvals month on month, because we have more permits filed. So it wouldn't be surprising to see some positive figures there again, but they are expecting some very negative figures there at 12.5%. I think that would be very unlikely, given we're pretty much at 20% last time. To see a move back down to minus 10% would be a very bearish movement indeed. And then, guys, we have the big one. And to finish it off on Friday as well, we have FOMC members addressing the markets afterwards. A few of them speaking in California regarding monetary policy. Most of them speaking in the last three speaking at University of California about monetary policy. So we could see some volatility coming towards the end of Friday's price action there with the dollar. But of course, guys, the major one, the big data is there. Non-farm payroll data is one of the largest, data releases month on month. Saying that, though, last month was quite disappointing. And for those of you that are familiar with, my expectations for non-farm payroll, it's pretty consistent what I'm expecting. I'm expecting something like this with price. The initial movement to the upside, and then to the downside, and then closing off there. Apologies, guys, that's a little bit scraggly. Let me draw that out a bit smoother. So that initial movement to the highs, and down to the lows, and then back. So this is what we call a whipsaw within the market, where the prices will move, between that distance, maybe sort of a couple of minutes, or 5-10 minutes or so, something like that. But ultimately, this is what I would expect, is a lot of uncertainty off of the back of this data release, this non-farm employment change data. And this is exactly what we saw last week. And this is why it was slightly disappointing last week, was because not only did we see this, but the range that we saw this price action, especially over the euro dollar, was all in all about you know, a 20 pip range between, the highs up to the highs and then down to the lows. So, a couple of years ago, guys, talking probably about 4 years, 5 years ago when I first started trading, especially, the non-farm payroll event was such a volatile event, and we saw, we could have put another zero on the end of this, another zero on the end of this figure, because we saw huge movements with the US dollar, a few years ago, but slowly, non-farm payroll data has been getting a little bit less and less volatile as time has been going on. That being said, guys, I'm not saying that I don't expect volatility. Um, you know, all I'm saying is let me take away that prediction on the range. Ultimately, that is still the expectation for non-farm payroll. I'm still expecting this whipsaw and uncertainty. But last week it was pretty much textbook and below, between a very small range indeed. Okay, guys. Does anyone have any questions about the data expected for the week ahead? If not, not a problem. Fantastic. We will take a look to the charts. If you do have any questions about the fundamentals, guys, now is the time to pop that in the group. Otherwise, we will continue to the charts. Okay. Fantastic, guys. So, one moment. Let's take a look over. Okay, there we go. So the euro yen is where my attention is coming back to. Euro yen currently trading at this 120, no, right, 124.30 price level. We had looked at some opportunities on this previously from around that 125.01, looking at that significant price level to see if the sellers, could keep prices below that. We had a good reaction down to that 124 price handle last time, regardless. So I think we're going to, be looking like we're in for really some more of the same here with the euro yen. For me, I would expect prices to come back up towards this 125 handle. But yeah, so we're going to have to look at our stop loss for this position, because the stop loss might be a little bit large. Because really, if we were looking back up here at this level, this last swing here, this last clear swing in the market, we'd be looking at about 126.20. So about 120 pips. Expectation there on our trade position, which is a little bit steep. So I think really the 125.01 is where we're going to look to enter. But I think we can, if we take a closer look on the hourly and take a look at the previous price history, I think the 125.46 significant price could offer us a good stop loss for this trade position. Okay, guys. Apologies, guys. One moment. Just apologies. I'm just setting up some my phone 4G just in case, because my Wi-Fi is just slowing down a little bit for some reason. I'm not too sure. Guys, if it starts to get a little bit slow and crackly, and signal starts to get poor, please pop a message in the group and I will sort it. But just seeing there, my laptop speed has slowed down a little bit, and it is due to my Wi-Fi. So guys, looking at the previous price history, let's look at this hourly price action. Let's uncompress the chart a little bit. Looking back up to this 125.50s price level. Now that's what we were looking at there. At that 126 price handle, that previous swing in the market. But I think we have seen a good rejection from that 125.50s. Just want to look at the previous price action from around this level and see what kind of supply we have at this level within the market. So we have good supply at that 125.40. Okay, I'm going to set the position a little bit differently this evening, guys. Okay, instead of looking to place my entry at the 125.01, I'm going to look to average in to this trade position. Okay, so I'm going to look to put half of my position on at 125.01. I'm going to look to put the other half on at 125.46. Okay, now my stop loss for both of these positions are going to be slightly different. I'm going to have one at the 125 above. I think it's about 125.60. It's 125.46. There we go. I'm going to put my stop for the first position, yeah, just above that 125.60s, just above this area of supply here within the market, because the market shouldn't break this level at 125.60. So, that should average us in quite nicely over the 125.01 and the 125.45. And it just gives us a little bit more of a macro stop on our second position, and still gives us a good value on our first position. So I think I'm going to do that with this entry. So change it up ever so slightly, guys, but this is the reason why we keep ourselves versatile within the markets. If it didn't meet the criteria to look to place, a full entry over a specific price level, we can look to scale in and average our entry in over, between a small range. I wouldn't look to do this over, hundreds of pips. It's only because we have that small range of about 40 pips between the two entries, so we can still manage our position without it getting, without having too many entries in, over and averaging in over hundreds of pips. That's not what we're looking for here. We're just looking to, of course, average our entry to maybe 125, maybe to about 125.20. But ultimately just ensuring that we don't miss out on the opportunity as well. Because if we look to place our entry at 125.45, we could see our entry at 125, that 125.01 hit, and the sellers could come back into the market and push prices back below the current price level. So I don't want to be too greedy with this position, and you know, not see our entry hit, and then for it to meet our expectation. And likewise, I don't want to be too aggressive and put all of our risk on one price level. I think if we average that out between the two significant price levels, you know, we're not going to see a new swing broken here at that 126, above that 126 handle. So let's get down to labeling it in terms of course. It's going to be an interesting and label in terms of the text. So. Apologies, guys. One moment. I'm not sure why, but it's not letting me type into my. Apologies. It's not letting me type into the message at the moment, guys. Apologies. One moment. Delete those. Apologies, guys. My labels don't seem to be working properly at the moment. So I don't seem to be able to type any text in those labels. Apologies, I'm just trying to rectify that now. I don't know whether that's because of the poor Wi-Fi signal. It's not allowing me to do this, but this is the first time I've had such problems with the with this desktop. Okay. But I have to. I'm trying to think if there's any way around this quickly, guys. If not, we will just have to go through the position, manually, sort of by reading it out. My apologies there, guys. I'm not sure why. No, it's not allowing me to do this. I've got an idea though, actually. If it's not allowing me to do these types of labels, maybe I can do these labels. There we go. We found a solution for our problem. That's what we do, guys, as traders. When confronted with a challenge, we adapt and overcome that challenge. So we are looking for a sell limit on this currency pair. I'm just trying to see if I can make this smaller. That's all. No, okay. Just be happy with the label I've got, I think. Okay, sell limit. I'm going to say half position at 125.00. 125.00, and then we will go stop loss at 125.65. That puts us above those previous levels that we looked at, those previous supply levels. So, even if we do see that significant price broken slightly at 125.50, 125.40, the 120, we should see that supply come back into the market once again at 125.65. And in terms of what we're looking for with a profit target, well, let's back into the 4 hourly and look back onto the chart. One down to that 123.30, 123.85, sorry, would be the next obvious price area, but I think we can look to probably hold out for that 123.45 as we look to create a lower low in that price structure, breaking these previous lows here from like 123.80. So 123.50 for me for my stop loss, for my profit target, sorry, for this position. Text. Oh, delete that one. Change this label. Apologies, guys, 1 moment. Oh well, this is one downside with it, I suppose. Okay, we'll put a new label in. Profit target for this position. Target is at 123. We'll go 55, just above that 123.46 price level, giving us a good profit target of around 145 pips for the first position. The second position is a sell limit half position at 125.45. And then for this one, we'll put a slightly larger macro stop on this trade position, which utilizes that previous swing as well. So we'll go 126 for our stop loss for this position. 126.00, still offering us a position stop loss of 55 pips, which is slightly smaller than previous position. And then ultimately profit targets looking at the same area at 123.55, giving us a much better risk to reward on this half of the position. So we have about 4-to-1 risk to reward off the second position. So if we're risking half of our usual lot, so for example, we could be risking 1% overall, risking 0.5% on the first position and 0.5% on the second position. Okay, so we're still risking 1% overall, but we're averaging in over our trade position. So stand to make 4-1 on the second position, which would see us, we risked 0.5%, make 2%, and then you know, our first position, if that meets the expectation, if that just meets the expectation, then you know we'll be looking at around just over 2-1, just over 2-1 there on the risk to reward. So if we risked 0.5%, we would get back 1. So guys, do you have any questions with regards to any of our positions there? Sorry, with regards to anything that we've covered here in our webinar, from the fundamentals to our position in the market. This is my main play for the week ahead, the euro yen. It's a bit more technical than usual in terms of the entry, but I think this is going to you know, give us the best value for our transactions in the market. Okay guys, so if you do have any questions, I'm going to give you a moment or two to finish writing out those questions. If not, we will leave it here for this evening, guys. We have our position for the week ahead, and we will regroup once again next Sunday evening. Fantastic, guys. I wish you all the best for the week ahead. Take care and goodbye for now.